Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, geopolitics has been dominating market moves, particularly in the commodities complex. Following US moves on Venezuela, the oil market initially assumed supply would increase, putting downward pressure on oil prices. But Carly Gardner from Carly Trading says there's so much event risk and news thrown at the markets that it's led to analysis paralysis.
But what's interesting about this chart is there's a 20-year trend line at the bottom. If you look at the fallout from the financial crisis around 2008, crude oil, we started at $150 a barrel. We bottomed out at $32 a barrel during that cycle. And then we experienced a bull market, and the next bear market bottomed out about $6 lower, roughly around $26. And then we again experienced a bull market, and we eventually had the COVID washout. That washout, I'm calling it $20 a barrel because it was really, really messy. Some of the front months got lower, but for all intents and purposes, it held roughly $20 on the back months. So you see a pattern here. For the last 20 years, we've had a total of 4 bear markets. We're in the 4th one. The first 3 touched this line. Crude oil doesn't bottom in a quiet, orderly fashion. It bottoms out when nobody in the world thinks crude oil will ever go up again. And it's been doing that in a pattern. So I'm not saying that we're guaranteed to see $15 oil on this cycle, but if this bear market ends the way that the last 3 have, we could easily see $15 oil. And I know that's pretty wild to think about. And we start thinking about what the heck's going on in the world for us to see $15 oil. But the reality is, once prices get below $65 a barrel, that's the line you see right there in the middle of the chart. Historically, it's been kind of a slow-moving train wreck that eventually leads to capitulation pricing in crude oil. So again, I'm not necessarily saying this is a done deal, but I'm saying we should keep our mind open to what the true risk is on the downside of crude oil, because it's substantial.
Well, Michael Gable from Fairmont Equities argues that despite having had this potentially very bearish news for oil, it's actually attracted support, which has prompted him to look at trading opportunity via the ETF Fuel.
Fuel captures all the major overseas oil and gas companies. So as we could see, the far left-hand side is 2017, 2018. So look, they're still trading at those sorts of levels that were last seen 8 years ago. So definitely been underperforming the broader market, but price has been tightening up, and it is starting to break to the upside here. So oil and gas, the energy sector used to account for about 14% of the S&P 500. Now it's less than 3%. So there's a lot of money not already in this sector. So when it starts moving, I think there's a lot more money to flow into it. So fuel is one way to capture it. If you don't feel like you want to be putting your money at risk in a Woodside or a Santos or one of the locals, check out this ETF. I think it'll do very well this year.
Another part of the energy sector that has been on the move recently is coal. Michael Gable says there isn't much new supply coming to the market over the next several years because no one wants to invest in it. That's prompted him to look at local coal stocks such as New Hope.
If you've got a coal mine, you've pretty much you're in the box seat there, but there is still a lot of global demand for coal. I think coal prices will, I think they're bottoming out. They're starting to move, but it's really the coal equities which have really come alive over the past few weeks. This is New Hope coal. This is again one that we're holding for clients at the moment, and as we could see, the trading range is starting to tighten up. This is a 5-year chart, and it's on the cusp of a breakout. So by that I mean it's very close to breaking above that upper blue line, and if it was to do that, you'd end up with quite a significant rally. So another one for our viewers to keep an eye on. So energy, I think it'll do very well. As a bit of a wrap up for this year, I'm still bullish on the other commodities, but everyone's talking about the others. Energy's the one to get involved in if you're not already.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.